I hope you are doing well. Today we'll be focusing on the dividends payout policy rate, um, which is a percentage, like it is always given as a percentage. For example, 90%, 100%, 105%. It is important to know how to deal with this indicator, how to comment, how to make conclusions using the information given, because examiners like to set this question asking you about the dividends payout policy, the future expansions or the future growth, whatever. So let's look at our table here explaining um what it means by paying a higher dividends and a lower dividends. So a higher dividends like could be like more than 100%, 100%, or 97%, like 90 something percent, 80 something percent. That's a higher dividends policy. And a lower could be maybe 40 something percent, 30%, etc. So if the directors choose to declare a higher dividends, the reason could be that the directors want to satisfy the shareholders, because if shareholders get more dividends, a higher dividends, they will be happy because they are getting a lot of money. And the other reason might be that the directors want to be reappointed at the AGM, at the annual general meeting, because if someone is giving you lot of rewards, you will, like, you will want them to keep on working for you because you are getting more rewards from them. Then the other reason, a possible reason could be like no plans for growth or future expansion. um let's say you pay your shareholders, your owners, like 97% of your profits, you will retain 3%. It means that you are not focusing on the future because you are retaining a small amount of money. So let's check the examples, not the examples, the reason for lower dividends payout policy. So if we pay lower, it might mean that we want to save for the future. Let's say we declare like maybe 50% dividends, then we will retain 50%. It means we are going to use that 50% that we retained for future growth or future expansion. Or maybe we could pay like a lower dividends, like 40%, because there was a decline in profit. These are the reasons that you're gonna use to comment on why they choose, like why they choose to pay a lower dividends. You're going to come here and comment directors what. Then if they pay a higher dividends, you're gonna also have to come here, have to memorize this so that you can be able to make conclusions. So NB, if the dividend payout policy is more than 100%, it means they also used last year's profit to declare dividends. It means they used this year's profit plus last year's profit. And always a company that declares lower dividends saves more for future growth or expansion. So sometimes you will not be given the dividends payout policy rate, but you will be asked a question about it. So you have to know the formula to calculate the dividends payout policy. Your formula is given by dividends per share divided by earning per share multiplied by 100 over 1. You will get the dividends payout policy as a percentage, sorry, so that you can be able to make conclusions. So let's look at our question that we have got today. We have two companies, Dodo Ltd and Nasha Ltd. We are going to focus on the dividend payout policy indicator only. So the question says, explain to Ben which company has accumulated sufficient money. It means which company has raised sufficient money to finance expansion in the upcoming financial year. Quote relevant figures and provide a comparison to support your answer. So obviously it says dividends payout policy. We are going to touch on this dividends payout policy. But the question like says which companies accumulated sufficient money to finance expansion. So let's come here. I have said that like a company that declares lower dividends saves more for future growth or expansion. So even here it means the company that declared a lower dividends is the one that accumulated sufficient money to finance expansion. So these notes are very important. So let's go to our information. So let's look at the dividends payout rate. Okay, Nasha Ltd 2025 like declared 50%, meaning they retained 50% for future expansion. So Dodo Ltd declared 97%, meaning they retained 3% for future growth. So they retained a lower percentage of their profits. This one retained 50% of their profits for future growth. It means, let's come here, the company that declares lower dividends saves more for future growth. So Nasha saved more because they declared a lower percentage. They declared 50%, meaning they accumulated 50%, but then Dodo only accumulated 3%. So I the answer is that Nasha declared 50% and retained 50% for future growth, and I've explained why. Here, this is the reason they retained 50%. This one's retained only 3% because they declared 97%. So those are the reasons you can use. Let's go back to the question. Quote relevant figures and provide comparison. So I have quoted relevant figures using the percentages, the dividends payout rate, and I compared the percentages of the two companies. So thank you. This is how you comment. Always it will be like this. So if you memorize these notes, you will be okay.